Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Bamakshi Doria and with me is Vivek Iyer. Well, a very good afternoon to you, Vivek. The sentiment right now is starkly different than what we had started off the week with. It's a green-looking screen, nothing to complain. Of course, there's some bit of, sort of decline from the day's highest point, but nevertheless, we're still holding in the green.
That's right. Good afternoon, Bamakshi. So cooling off a little bit from the day's highest point. Expected, given the fact that we are in expiry week. The Nifty cooled off a little over 150 points from the day's highest point. But otherwise, all of the indices continue to trade in the green. But we have quite a lot lined up on the show. It's an action-packed show. Let's start off with the top headlines. Stocks gain on hopes of a durable truce between Iran and Israel. PSU banks and metals are prominent gainers. Mid-caps gain at par.
Defense stocks fall on profit booking following US President Donald Trump's announcement of a ceasefire between Israel and Iran. The stocks had run up significantly in the wake of geopolitical tensions.
Crude drops 8% overnight to revert to levels before the Israel-Iran war broke out. Fears over the Strait of Hormuz being closed, dissipating, also helps cool prices.
KPIT Tech points to slower deal conversions, delays in project ramp-ups, uncertain demand trends and adverse forex movements in its mid-quarter update. Spooking the street, the stock dives.
Enviro Infra surges over 14% in trade after winning new projects worth over 300 crores in the domestic market. The company has also announced two major acquisitions in the renewable energy sector.
Well, the Nifty is holding comfortably above the 25,100 mark. We're seeing some bit of cool off from the day's highest point. Even though despite that, both the Nifty as well as the Sensex are doing quite well in the trading session today. The advanced decline ratio will also come up for you on the screens. So far in the day, it had been a parallel line with the, the advances much more in a number as compared to the declines. That gap seems to be narrowing slightly, but nevertheless, it's still quite broad with around 1,900 stocks advancing for almost 600 stocks declining. The mid-cap end of the market resultantly is reflecting that, up almost 0.7%. What's doing well in today's trading session is the PSU pack. All of the PSU banks are up in trade today. There are no top losers out here. Apart from that, when we look at what's not doing too well is the Nifty Media. We're seeing some profit booking on Z Entertainment. But like I said before, it's a lot of action happening in the mid-cap space. And to take us through that, we now have Hormaz, who has walked across through the wall, and he will tell us, what are the stocks that are moving around in trade. Good afternoon, Hormaz.
Good afternoon, Ramakshi, and there's no reason to complain whatsoever, even if though we are slightly off the highs of the day, especially in the broader markets. There are plenty of gainers. We start off with that. A new appointment of a managing director has sent Bajaj Consumer shares 20% higher. JM Financial has been the top gainer through the day on the Nifty 500 all through the day. Delivery is at the highest point of the day, 4% higher on that stock as well. And in some of the other rebounding stocks are the rice names. They were bashed yesterday. They're seeing a very healthy rebound today. LT Foods has recovered almost everything that it lost yesterday. Chamanlal Setia too doing well. KRBL is at the highest point of the day. So good going for all of these rice names, a beneficiary of the ceasefire that has taken place between Israel and Iran. The newsmakers in today's session, Enviro Infra, after that order win worth 300 crores is up 13%. Aztec Life recently approved a rights issue just a few minutes ago. It's a 12% higher on that stock. The fall in oil prices has hurt Oil India, 5% lower there, and the subdued management commentary from KPIT Tech has taken the stock to the day's low, 6% lower on that stock. Doing well on the volumes front. Poonawalla FinCorp, another high on this stock today. Titagarh out of the band, so doing well. J&K Bank among the PSU lenders doing well, and HBL Engineering gaining on high volumes. And as you mentioned, the one stock index not doing well is the defense space. Garden Reach is now down 9% after some profit booking from higher levels. BEML is down 7, Apollo Micro is down 6, Midani is down 6. So almost all of these defense stocks are bleeding in today's trading session. A lot of significant profit booking seen after the moves that we have seen over the last month and a half. Back to you guys.
Thank you so much, Hormaz, for taking us through the list of stocks that are doing or making all the moves in the broader end of the markets. Clearly, the defense pack seeing a bit of profit booking. But it's a good time to welcome Srikanth Chauhan of Kotak Securities for a technical check on the market. Good afternoon, Srikanth. Thank you so much for joining us. Well, the volatility is quite high. Nifty is cooled off quite significantly from the day's highest point. How are you looking at the markets at the current levels?
Good afternoon, Vivek. Good afternoon, everyone. Yeah, I think the markets are still like finding difficulties to sustain at higher levels, and it is completely depending upon the news flow, which is highly uncertain. So till the markets are not closing about 25,300, I'm of the view that the markets is going to spend time between the range. Also, it depends definitely upon the news flow, but based on technicals, I think in case if there is any correction, the way right now we are witnessing from the highs, close to 24,900, 950, the market is having excellent support in terms of averages. So close to those levels, we should look for taking some contra bets in the market, but with a tight stop loss at 24,700. Now from here onward, 24,700 is going to act as major trend deciding level. And in case if we see the market is dropping below that, then yes, we can see further more weakness. Otherwise, now the range has shifted from 24,500 to 24,700, and broader range should be 24,700 to 25,300.
Well, thanks for that, Shrikant. Vamakshi here. So, are you looking at booking profits at the current levels? If not, what are the stocks that you would like to buy even at these levels?
No, Vamakshi, I think now the market has again corrected back to 25,000 levels, and a lot of traders, in fact, those who are like trading with a very short-term view, they are trying to take contra trade around its important support levels. At higher levels, we saw some profit booking around 25,200, 25,250, and now again the market is correcting. So at these levels, we should look for taking some contra bets of going long in certain stocks, but at higher levels, certainly till the market is not closing above 25,300, we should be careful. But at these levels, we like BHEL, which is currently trading around some 262, 261. There the stock has formed classic reversal formation. It's a continuation formation that I can say based on its technical formation. And I'm of the view that now the stock is heading for again 285, 290 in next few days. So it's a buy at current levels around 260 with a stop loss at 250 and with a target of 290. The other stock which we like is Eternal, Zomato, which is currently trading around 257, 258. There also the formation is very clearly showing a lot of strength in terms of rising top, rising bottom. And based on its technical formation, I'm expecting stock to move towards 275, 280. We can keep a stop loss at 247 for the same.
Thank you so much, Shrikant, for joining us, giving us your view on the markets as well as your individual trading bets. Well, before we slip into a short break, it's a good time to remind you to tune into the all-new CNBC TV 18 Prime, bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC TV 18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV 18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and the Global Lens at 8:30 p.m.
Welcome back. You're watching Midcap Radar on CNBC TV 18. Let's shift our focus to the housing sector. Knight Frank India has released their affordability index. The report says that interest rate cuts have boosted affordability in the first half of 2025. While Ahmedabad, Pune and Kolkata are the most affordable markets, Mumbai is the least affordable city. To discuss this and more, we now have Ghulam Zia, who is the Senior Executive Director at Knight Frank India, who is joining us now. Good afternoon to you, Mr. Zia. Historically, when affordability has improved, what has been the impact on housing sales as well as the inventory levels? If you can just outline that, and is the current scenario any different as compared to what you've seen in the past?
Well, to start with, the inventory levels have been, varying for last, if I talk about last 3 odd years, ever since the market has turned, and the sector has started performing much better for last 2-3 years, and then because of a velocity of sales improving, the new inventories that have been launched are not really keeping pace. So overall, while there was a concern of huge inventory, but whatever said and done, the inventories have been lapped up have been selling very fast. So the velocity of sales have shot up more than the increase in new supplies that is hitting in. So overall, the environment out there is such that barring one or two cities, like for example, Bengaluru would be perhaps behaving slightly differently, and so is the case of NCR. But the rest of the markets have been pretty similar, where the inventories have not come as much to go alongside the velocity of sales. So net, what we are looking at is again even the fact of price rise also has been too phenomenal both in Bangalore and NCR. So these are two cities where even affordability is impacted because of that. But at the macro level, the inventory levels are not really keeping pace with the velocity of sales.
Okay, Gulam, thank you so much for joining us. So what you're essentially telling us is that the current pace at which inventory is getting developed, you're saying that it's getting snapped up. So home buyers are actually snapping up homes faster than they can be built. Well, there's another very interesting point that you made in your report, especially when it comes to the affordability level. And you've mentioned that for Mumbai, it has gone above the 50 mark, indicating that homes in Mumbai are quite unaffordable. So especially if you could put the spotlight when it comes to the urban areas, what are the trends that you're witnessing over here? And has there been a significant drop in interest as far as home buying is concerned?
Sure. So two aspects here. Let me start with the affordability itself, the way we are tracking. We are doing it for last about 15 odd years. We started tracking it from 2010. And since we are focusing on Mumbai, your focus was, how unaffordable is Mumbai a market? Those days, talking about 2010, the index was at 93, 94. And that has come below 50 for the first time as we are marking right now. And that is where affordability is coming in, like in spite of most of us believing that Mumbai is the most unaffordable market, but the index has been changing and it has come down from 98 to 48, 93 to 48, which means affordability of Mumbai has actually improved a lot. And for the first time, it has gone below 50 mark on the index. And on the other side, if I talk about other markets, like for example, Delhi, while Delhi still is at 28%, much more affordable than Mumbai, but then that's the only market where affordability has actually worsened. It used to be about 25 or 26 mark till about a couple of months back. It has gone up to 28%. 28 on the index. So if you look at the rest of the cities also, while as you rightly said, two or three cities are always very, very affordable, like Ahmedabad, Kolkata, and even Hyderabad for that matter, while the prices have shot up a lot in Hyderabad, still the affordability levels are much, much respectable. However, Mumbai is one market which has breached all that for last 15 odd years. It has been continuously falling in terms of affordability. Well, the reason is simple. Now coming to interest rate that you spoke about in the second part of your question. Interest rates do have a huge impact because when we talk about this index, affordability is a part of how much do you have in terms of wealth and your ability to raise EMIs every month. So the EMI, the value that you can set aside for EMI has improved a lot with the interest rates coming down. So while we are talking about 100 bips of a cut from the RBI side, while it may not have completely populated down to all home loan seekers, but that 100 bips correction has had a huge impact. And that impact is where, today if I'm talking about Mumbai going down by 2 percentage points, 200 bips within a matter of about a month and a half or two, the reason is simple, because the home loan becoming cheaper and affordable, direct impact on the affordability. So overall, this is a scenario while the NCR is the only market where affordability has actually worsened. The rest of all the markets, affordability is improving.
Well, Gulam, your report also mentions that affordability is at the best levels that we've seen since the pandemic. So, in terms of the supply side, let's talk about that because, of course, demand is doing quite well, like you pointed out. So, from the supply side, is the mix now expected to change because it is actually the lower end of the consumer which benefits from lower interest rates? So, will the mix of launches that comes from developers now lean more towards the mid-income, the affordable segment, because all of these lower-end segments were impacted?
Well, first to start, let me just put the things in perspective. First of all, the upper end of the market that we always talk about is very significantly visible in Mumbai and Delhi a lot, and to a certain extent even in Bangalore. However, the mid to lower end of the market is somewhere impacted because not many developers are catering to that, as we have been noticing. Most of the known and listed players have exited the affordable segment per se, which is the low-most segment of it. But the mid-end segment has always been thriving and doing well. While super luxury is the only one where most of the press captures, the per square foot rates, etc., are spoken about a lot. But the mid to upper end is the market where most of the developers are present and bringing in lots of inventory in that segment. However, the lower segment, as you're talking about, which is more prone to any impact or dynamics of interest rate, is that sector where none of the listed players or known developers catering to or bringing in any inventory. And that has had a severe impact at the bottom end of the market where affordability matters a lot. You're very right when you said that this is a segment where interest rates really matters. But in that segment, none of the known developers are catering to the requirements, and that is a big issue. There's a big risk that we're facing because of Pradhan Mantri Awas Yojana 2.0, which was kicked in in about October 2024. After that, huge interest has generated in the lower end, and with the home loan interest rates coming down, overall a double whammy where the bottom end of the market is actually expected to come in hordes. But for want of any proper inventory, we are feeling that it will have a significant impact with prices shooting up in that segment, and that's a big risk that we're facing right now.
Well, very, very interesting insights there, Ghulam. Thank you so much for joining us, giving us a view of how affordability is panning out, especially as far as the residential real estate market is concerned. Well, we'll now slip into a short break, but before we do that, some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Welcome back. Let's pull up the chart for Nifty. The intraday chart will show you that since 1 p.m. the index has seen significant pressure. For now, the index is off nearly 250 points from the day's highest point. The mid-cap end of the market is also seeing some bit of selling pressure creep up as well. The intraday chart will come up for you. There you see around a 300-point cool-off from the day's highest point, and some stocks that are actually taking it to the chin includes PB Fintech. The stock has seen a fall of almost 2% from the day's highest point. It was trading in the green at the start of the session, but it is now trading close to the day's lowest point. The next stock that we're also keeping an eye out for is BSE. The stock too, started off in the green, is fairly in the green for now, but has seen a fair bit of cool-off from the day highest point. But there is one stock that is standing out, and that is Enviro Infra. In our special segment, Midcap Spotlight, Vivek will focus on this company. And, Vivek, why is this stock up and away in trade today in an otherwise, sort of wobbly market?
Well, thank you so much for that, Vamakshi. First up, let's understand what Enviro Infra does. Well, largely similar to what a Wartech Wabag does, but much smaller in terms of scale, size, scope. But very similar, water desalination, water filtration is what the company essentially does. Company has said that in FY26 so far, they've won 3 orders, and this is from 3 separate municipal corporations. The total value of all of these 3 orders is slightly in excess of 300 crore. So what is the scope of the order? The company will do both EPC as well as do O&M, which is operation and maintenance, for 15 years. So the 3 regions from where the company has received these orders are Ambikapur, Rajnandgaon, as well as Korba. And in all of these places, the company will give various specifications, but all of them will pertain to various millions of liters per day that they will have to filter and give to the municipal corporation. Along with that, the company has also announced 2 interesting acquisitions, and this is in the renewable energy space. First up, the company is going to acquire Vento Power Infra Private Limited. This is a small 40 megawatt solar power project. It's in Odisha. Company has received this particular project from PTC India Financial Services, and this particular project already has a PPA in place. It's for 4.1 rupees per unit, and this particular tariff is for a period of close to 18 years. Along with that, they've also received a 29 megawatt solar power project in Maharashtra, and again over here, if you look at the tariff-based revenue, 0.88 rupees per unit for the next 25 years. So 2 interesting renewable energy acquisitions where the PPAs are already in place. Remember, at the end of FY25, the company had an order book in excess of 1100 crore for the projects, and O&M an order book of over 800 crore. Enviro Infra doing very well today. Strong volumes. That stock at one point of time was up over 14%. Continues to trade with gains of over 12%. But with that, and with the news that the markets continue to be quite sluggish, especially in the last hour, you're actually seen most of the markets cool off a little bit from the day's highest point, continue to remain in green territory, but have cooled off quite significantly. But with that, it's all the time we have on this edition of Mid Cap Radar, Mutual Fund Corner, when we return.